Hi, I'm here today with Julie Crockett from Australian Property Investment Solutions. Thanks for joining me, Julie.
Thank you, Mike.
We're going to talk about a few topics and hopefully make a little bit of a series while I've got you sort of duct taped to the chair this morning. To kick us off, where are we? We're at end of April, start of May. We've got the federal election coming up. We're sort of post-APRA. Property's still declining as per the last stats. What are you seeing in the market, and maybe can we contrast Sydney, where you're based, and also the rest of Australia, because you purchase across Australia, right?
We do indeed, yeah. Look, it's a really interesting time, a really interesting market, but it's absolutely doing what all markets do. All property markets will hit a high and then they will come off and, you know, seemingly decline. And it's only really those people who have to sell in those markets that will, you know, lose out. So the people who've bought at the top, if they're holding for the long term, they'll be fine. As far as the rest of the country is concerned, you know, there's always good markets where you can buy into, and I'm talking from an investment point of view. There's still some probably good locations in Sydney, although you'll pay higher money for them. But yeah, lots of places around Australia are really coming to the fore now as being affordable and giving really good, strong rental yields as well.
Was there anything unusual about this particular peak? Like, it went fairly big. I think the decline that we're in now is the biggest one maybe since the 70s or 80s. What's different? Did it go extra high and now it's just going the inverse extra low, or were there some fundamental big changes that made it a bit of a different peak and trough this time around, do you think?
Yeah, definitely some fundamental changes, and the one that's probably had the biggest effect is APRA cracking down on banks and banks responding accordingly and making it quite challenging for investors to actually borrow money. There are lots of frustrated investors out there who would love to be in the market.
I think I'm one of them.
Absolutely, because, you know, as you see prices declining, a lot of people have got equity in their properties still, but can't service loans. So that's certainly been a bit of a standout in terms of how difficult it's been for people to actually access finance and then to be able to keep moving forward with properties.
Now, crystal ball, we're still in a declining market, I think. Are we close to the bottom? Are we not going to be able to tell until the election and depending on who wins it?
Yeah, look, I don't think the election's got too much to do with it, to be quite honest, Mike. I think, you know, it's always nigh on impossible to pick the bottom of the market and the top of the market. So those people that were still buying right at the top are now probably sitting back and thinking, oh, if only I'd waited a little bit longer, I could have bought in this market. But it just proves the point that we really don't know where the top of the market is and where the bottom is. The best time to be buying property is when you can negotiate the price. So this is a buyer's market in Sydney, and if you're willing to really slice the price, get in there and negotiate hard, then you will do very, very well in this market.
Good. If you can get the finance, get amongst it.
Yes, absolutely.